Welcome, Andy, to the show today. It's good to have you back. It's been a couple weeks.
Good to be back with you too, brother.
We've had quite a bit of news happen, so I think we've got a lot to cover today.
Yeah, gold and silver taking off for sure. It's just become obvious that silver is massively undervalued in its relation to gold, and we can get into the reasons why. We've talked about many of the reasons why. But today was an example of what you could expect to see when things get back to where they're supposed to be, just reaching historical levels of man's ratio between the gold, silver, let alone the geological ratio. Man's ratio is somewhere in the 42 to 43 to 1 over the last 150 years. That was with the geological ratio at 16 to 1, but silver's disappearing. And now it's 7 to 1, and its uses are going higher. And this is why you're seeing such massive overt attempts not only to hold down the price of silver, but for like the Chinese to fly around the world buying doré and concentrate from Latin America to mask how much they're really accumulating, even as the second largest producer of silver in the world. But today's a good example of what you could expect to see. You know, gold's up $30, huge move. Silver's up $1.60. It's not as impressive as $30, but take a step back and look at the percentage. It's 1.1 versus 5.1. The percentage, the performance of silver percentage-wise was 5 times the move of gold today. Now, that's just a microcosm. But this is looking at silver, which right now is at the tip of a 40-plus year. Was it 40? I think it's a 40. A 40-plus year cup and handle formation. Is it 40 or 24? I'm not sure. But a massive cup and handle formation, which is hugely bullish for silver. I just think that this is one of these deals when the thing finally goes to where everyone has been talking about trading their silver into gold at some point, perhaps, when the ratio corrects. This is how it will look. This is just one day, but what if it were 1 week or 1 month or 6 months of silver outperforming gold 5 times percentage? And when you step on price of silver the way that 8 commercial banks are holding the largest short position, concentrated short position on silver of any commodity ever traded in the history of the COMEX, the largest concentrated short, illegal at that, CFTC, where the hell are they? When this really starts to break because the rest of the world is wise to what we're doing, the potential is limitless.
But Andy, what do you think might be making a difference in why we're seeing some movement in that gold to silver ratio? I saw a complete drop today.
Well, I mean, I think it's just a realization around the globe that silver has become not an industrial metal, but a strategic metal. It's a realization by countries like India, let me just look at the exact number here. Their number up year to date. So last year was a huge number in the amount of silver that they imported. And last year, their number was 560 tons through the first half of the year. Right now, through the first half of 2024, their number is up 4,554 tons, or up 7-fold from what it was last year, which was a record year. That's India. And of course, like I said, China, the second largest producer of silver in the world, they're flying around all around Latin America, buying up the doré and the concentrate, paying twice what the West will pay. Then you take a look at, from a bullish standpoint, a massive cup and handle formation. And then the Fed cuts. For the first time in 2 years, we're seeing positive inflow into the ETFs. And that comes at a time when the Fed is cutting and when a massive bullish wave of reasoning, mostly accumulation by the BRICS countries, it's all converging together. And silver has been massively stepped on. According to the War Production Board, it's only a matter of months before war demands will increase sufficiently to require at least 200 million ounces a year. That's in 1942. You can Google this right here, S.2768. Here are the demand numbers from the Silver Institute. Industrial, electrical and electronics, photovoltaics, that's solar panels, brazing alloys and solders, other industrial, photography, jewelry, silverware. Where the hell is military? In 1942... we needed 200 million ounces. Today, we don't need any. Here are the London vaults right here, where you can see this is how they're beating us. They're draining the exchanges. Of the 800 million ounces or so that they have in London, over 500 million belong to the ETFs. So you got 300 million ounces there. And yet this is the same exchange that admits to trading 2.9 billion ounces of silver per day on an 800 million ounce stockpile, of which 500 million doesn't belong to the vault. It belongs to the ETFs. And so I think what's happening is that the real laws of supply and demand are catching up with the ability to suppress the price. And I will say it again, you can only successfully manipulate a market over time by pushing in the direction it's going. You can't hold back a tsunami of global demand. And especially when the demand is from the wealthy, sophisticated central banks who can match blows tit for tat with the West. And that's the difference. Then it's never been this way, and it is now. Most of us don't believe that this is real because it's like, it's like the little boy who cried wolf. Well, every time the price gets up, it gets hammered. But yet I've never seen a market with such strength and resiliency keeps coming back. And this is at a time with a positive real yield, a strong dollar, and ETF outflows for the last 2 years from the West, which are now just starting to turn up right at the same time the Fed is pivoting. Right at the same time, you're at the cusp of a massive cup and handle formation, massive central bank purchasing, just less than a month away from the BRICS meeting and 6-8 weeks away from the biggest election of our lives. There's so many reasons to be buying gold and silver right now. It's not even funny. But the last reason is to become wealthy. It is wealth. And the most well-informed traders in the world, the central bankers, are proving that with their constant acquisition, driving up the price, despite all of the negative things I just mentioned in the West, which now seem to be moving in the other direction. So yeah, last month, 8.1% of all the available silver in London was delivered. 8%, 25 million ounces. Who's got that kind of bread? That was delivered in 1 month. Goodbye. That ain't never coming back. Never. And of the nearly 3 billion actual ounces traded per day in London, they say it's 290 million, but they say it's 10 times understated. Okay. So roughly 2.9 billion ounces, 90+% are paper contracts. And if someone said, give it to me, well, sorry, I don't got it. Can't get it. So that's when the all at once moment happens. And that's when the Western exchanges lose. And the central banks of these countries are not accumulating Bitcoin the way that they are gold and silver. And that trend, which I've been documenting for 4 years, is accelerating faster than I've ever thought would even be possible. We're right at that breakout level of about 3250. You cross over 3250, which was, if I'm not mistaken, the previous resistance on the way down from 50 before, and would be the decade high. There's nothing stopping it on its way to 50. And when you talk about gold, we're already at all-time highs. But here again, the values are distorted completely and totally from reality because of the suppression. Like I showed you, gold was number 2 on that chart, right behind silver in terms of suppression, because it represents an illusion of strength of bond market and of the Western system. The rest of the world knows that we're lying about all of this stuff, lying about inflation, lying about unemployment, lying about money creation, all of the things that we've been able to successfully keep from people. The rest of the world gets it now, or much of the world gets it, and using it against us.
They never stopped inflation. And so now that they're lowering them, inflation's going to come back in. And, most of you that are watching this already know that gold and silver are hedges against inflation. So as that inflation goes up, they're going to continue to move up. And, what I'm wondering too is at what point we actually hit that. So, we could have some bank failures. We could have other issues that happen with the banks where they can't keep up with it. But it doesn't even have to be that. From what I'm hearing from you, it could be as simple as people actually understanding what's happening with all the paper, silver, and gold, and then starting to realize that what they have in these ETFs and some of these other instruments is not real. It's not really there. And then people right there could start freaking out and trying to move into the real precious metals. I mean, it doesn't have to take a bank collapse to bring that about.
What would trigger a collapse to the degree that most people are ill prepared to even think of would be a bail-in by a large bank, like maybe they sacrificed Bank of America. Is there any coincidence that Buffett's been yanking all of his money out? Is there any coincidence that they're the bank that holds, I don't know where they are with it, but for the last 2 years have held 1 billion ounces short on the silver market, 1 billion ounces, and as much as 40 million ounces short in gold, according to Ted Butler, rest his soul. He said in depth and 100% it was Bank of America. So, I mean, if they let one of these large banks get bailed in and sacrifice them at the altar because they want to consolidate the banks and move towards a CBDC, as we keep hearing over and over and over again, bail out one big bank and watch what would happen. Everyone would flip. Everyone would run as fast as they could the minute they get off of work, or they would just leave the office, go to the bank and say, give me my damn money. But the banks have a 0% reserve requirement until next month here, or in October, when it's supposed to go up to 4.5%, which would be considered a well liquefied bank. Think about that. Only 4.5% of assets on hand. So, yeah, you want to talk about a catalyst. To me, it all starts with the banks, and what sets the fuse, going, I don't know. Logic would say commercial real estate, but I guess we'll see.
Any dip opportunities coming, or should we just keep buying no matter what?
All things being equal, the old saying, buy the dips, sell the rips. Well, you don't do that with physical metal, but it would behoove you to buy on the dip. I have made it much easier. I tell this story all the time. When I started my company 34 years ago, my dad said, you buy something every 2 weeks or I'll fire you. And I've owned the company for over 2 decades myself. He won't fire me, but it's very important to me to honor my word to him. And I have. And I've bought something every 2 weeks for 34, going on 35 years, which allows the uncertainty curve to be smoothed out. The cost averaging. It allowed me to understand the dynamics and the power of compounding, not just of interest, people think, but of time. You go back to 1933. This ounce of gold was $20 gold piece, and here's a $20 gold certificate. They were interchangeable. If you had 500 $20 bills since 1930 in a shoebox that Grandpa left you, along with 500 of these, which was the same amount in 1933, this 20 grand, what's that worth? This is worth way over $1 million. So the point of it is that gold doesn't make you rich. It retains its purchasing power. And this is a bathtub, and this ounce of gold, well, this is sitting on the ledge, right? And the water underneath it is the value of the dollar. If I pour the water out or pull the plug on the water, did the price of gold go higher, or did the dollar just sink? Richard Russell always said, in the end, it's the number of ounces that you own. You won't even remember what you paid. And he's right. Yeah. It is about the number of ounces. Yeah, it's great if we can get the best price, but it shouldn't be your main determination, because this is worth a lot more than the money that you used to buy this with. And it's only getting worth less and less and less and less and less, or in this case, more and more and more and more and more. The generics give you the biggest bang for the buck. The maples would be second. That's the silver metal. And to me, gold, and I say silver, I'm talking bronze, silver, gold, like Olympics. Number one, in terms of what, if I had my choice, it's gold and silver eagles all day long. That would be my choice. The value in the eagles is not as good as it is in just about everything else, if we're just simply talking biggest bang for the buck. The maples would be a very close second. They're the purest silver coin in the world at 9999 fine. They're made in North America. They're easily recognized. For me, buying gold, I don't compromise. I buy eagles over maples. In silver, I'd rather have eagles, but I have no problem with the maples. They're more pure coin, and they're a couple bucks an ounce less, better value. But all things being considered, I would much rather own the eagles. That's the one knock against buying the generics, is that it's not a legal tender coin made by a sovereign mint. So you're going to save a little bit of money, but all things being equal, I would choose a Maple Leaf or a Philharmonic or a Britannia or a Krugerrand or a Kangaroo or an Eagle over a generic if I could. But buying the generics is better than not buying anything if it's an issue of saving money and cost affordability.
What's your thought between, say, coins and 10-ounce bars? In the question here specifically, candy bars versus, say, like a 10-ounce, I guess, like Royal Canadian Mint bar or something along those lines.
Well, I mean, to me, it doesn't matter if it's poured or extruded. I mean, the prettier bars are the ones that have the sharp, clean edges, if that's what you're talking about. There is no right or wrong answer any longer. I mean, typically, anything that comes out of the Royal Canadian Mint or the Pamp Swiss Mint or the Perth Mint or Valcambi, these are all name brand entities. So it doesn't really matter right now. Typically speaking, in 10-ounce bars, the Royal Canadian Mint would be the nicest of the bunch. But I prefer the ones that are not hand poured. I prefer the ones that are stamped and sharp edges and clean versus the ones that are poured, which are just fine too from a standpoint of value.
Yeah, my thought too for everybody watching is, as far as bars come, I really look more at price if I'm buying a bar. There's some that will fetch a little bit better on a resale. But for me, I try to stick with coins as much as possible. I do have rounds, but I go with more coins. And I do have some bars. For me, bars are usually something that I sell at a coin show. Well, Andy, what we're going to do here is I'm going to let you go here, and we're going to, unless you want to hang around for the picking here.
What are you giving away?
We're going to give away a couple of these gold backs.
How many are you giving away?
I'm going to give away. We've got a ton of people on here, so I'm going to give away 4 of these.
All right, I'll tell you what. I need to run, but what I want you to do is send me an email with the 4 winners, and I will send each one of those 4 winners a Silver Eagle as well.